This is our Forex blog for February 17th, 2014, and these are our currency indexes, which I think is one of the easiest ways of trading. If you have a currency like the dollar that's trending up, it's above its hourly moving average, and most of the day it's above its 15-minute moving average. It broke back from underneath to above the previous day's low. And you have another currency that, like the pound, has been up for 5 to 7 days in a row. It's likely to have some profit taking and a pullback. Once it breaks its hourly right here around 4 o'clock or 5 till 4, you have a currency is very likely to trend. So basically, in a nutshell, you want to buy the strong currencies or sell the weak. Or, another thing you can do is just use our Forex signals. These are built over the last 14 and a half years of myself trading. All kinds of different patterns that I look for, including Fibonacci pullbacks, Fibonacci profit targets, and basically using all of our statistical tools. Once we identify that there's a trend, we're looking to buy it because it was an uptrend. Once it pulled back too far and the momentum slowed down, we then flipped to start selling, and we bought the low right here because it was down statistically too much. And we have a slew of tools in here that help you know what trades to take. Obviously, not all of them are going to be winners, but the point is, if you make 15 pips here and you lose 7 here, and you got a trade here, you're short at 74 and you're out at 47, you made 25 plus pips here. You made an absolute fortune on this trade. 5 pips here, 5 pips there, 8 pips, 25 pips, 10 pips, 15 pips, lost 8. The majority of them are wins. And, we know and we analyze. There's almost 15,000 lines of code. Here's a pound dollar daily chart here, just to show you. It was up a considerable amount. And frequently when a currency has 3 big days up in a row, if you draw a fib from the low of 3 days ago to the high, the 50% level right here, 67.16, between that and the 62% retracement down here at 66.80, you're going to have a pullback. So when the market comes down to those areas from above, we give counter trend buy signals because the longer term trend is up. And you can see the first trade really wasn't that profitable, but the second one we're in at 99 and out at 16. We made 17 pips on it because of a longer term multi-day 50% to 62% Fibonacci pullback on the daily chart and hourly charts. So we use about 150 different patterns that are repeatable, in these signals. And obviously this one here is absolutely huge win, 67.50 out at 11. That's a 60 pip win. One nice trade like that can get rid of 6 or 7 losers. Now, if you want to actually learn how to trade and be a professional trader, using our currency indexes really helps. You can see the euro is trending up today. Anytime it pretty much makes higher highs, and you can use fibs on the currency indexes too. Notice the 50% pullback. Great place to buy right here. And if you scroll back over at this time, especially when it pulled back and did a little mini double bottom at the 50% level, the dollar's strong right there. The yen has been trending down, and it's kind of reset at the hourly moving average, and it's probably likely to try to test the lows. The daily trend's down, the weekly trend's down, the monthly trend's down. You could look for a buy here in the euro versus the yen around 9:30. So let's take a look at that. Euro yen 9:30. It's a pretty high probability buy. And the point is, when it doesn't work, here's 9:30, and you can see it did work and went from 54 up to 72. It didn't continue up for many hours after that, but the forces were to the upside, and that's what our currency index helps you do. Spot those. Here's a currency that was down Friday, Sunday. It found support at Friday's low, broke above its high right here, and even though the longer term trend is down, if a currency is down many days in a row, you're going to get probably a half day to a day and a half, even up to 3 days counter trend move up before sellers come back and start selling the downtrend again. So when this breaks out right here, what currency's weak? Well, the Australian, it's been going up. You can see pretty much all day Friday, Sunday. It just broke down. It can go down to this area or even in lower containment bands. So just as a, you know, it really doesn't even matter which currencies you trade on, one strong or one weak. On a short-term basis in the next 5 to 30 minutes, most of the time this strategy is going to work. So you got a weak Australian that might have been up for a few days in a row, and the CAD that's been weak and going down for a few days in a row. Both of them flipped at the same time. Australian CAD at 2 o'clock today is very likely to go down. Scroll back and take a look. And here you go. Fell from around 25 all the way down to 92. So almost a 30 plus pip move. And you know, most of the time these type of moves happen in at least 2 waves. So you know, get short, you follow it down, and then you get out at the fib targets. And if it can't break the first fib target, you get out. If it goes down, usually it will stop at the 1.618 fib target. And if you miss that trade, you also have a great opportunity to sell up here for, you know, about 20 pips on the downside. So basically, in a nutshell, you want to buy the strong currencies versus the weak and sell the weak versus the strong. And if you don't want to have to learn how to trade, just use our Forex signals. These are improving every week. I spend about 6 to 12 hours every single day working on it, making 10 up to 50 plus changes per day. And I release a new version of our software every weekend with the updated changes. So I think you'll be very happy with our Forex signals. I auto trade these myself. Maybe at some point in the future we might trade other people's money, but we don't release them as full auto, but we do release the signals and you can take the trades yourself. I don't want people trading other people's money and taking a percentage off of it using our signals. So that's the main reason we don't release a full auto. And the other reason is the brokers that we work with our auto trading have very high minimums, and most people probably wouldn't be able to trade with them anyway. So, and also we don't want to be regulated as CTAs, commodity trading advisors. So those 3 reasons are why we only release these as signals, and you decide to manually take the trade or not based on your own analysis, and these can offer kind of a roadmap on which direction to trade in.